Hi, everybody. It's Friday, November 14th, 2025, and we have a lot to talk about today. Markets did recover a bit after that brutal day of selling, but there are four main things I want to focus on today that are really driving the narrative. First would be semiconductors, some key levels on that, especially with NVIDIA earnings next week. And we have to talk about tech a little bit too. So I'll get into that in a second before I get into the charts. Then we have to talk about the indices because while things did rebound, the S&P 500 and Nasdaq both did reject at a level that we have to watch out for, and they both have a head and shoulders pattern on them that is pointing to more of a correction. We're also seeing more clusters of the Hindenburg omen, which is a whole other conversation. But if you're in Patreon, I just did some cycle analysis on that, and there's some really important things. So I have a post queued that's going to get to you tomorrow morning. And then we need to look at Bitcoin, of course, because that did break down from the key support that we were discussing yesterday. And the question is, are we going to be entering a bear market at this juncture? Has the bull run been the same as other bull runs? Did we even have a bull run? I would suggest that this bull run has been very different with Wall Street involved. And what we are going to continue to see in, let's say, bear market territory is also going to be far different. So I'll talk about that more as we get into the charts. And lastly, I want to look at Tesla because there has been a critical shift there. I might pull up a few other names, but really I want to focus on those four things because that's what's going to be shaping the narrative going forward. And what I mentioned at the intro on semiconductors, so we have NVIDIA earnings next week. And the market has been shaky, and you might be wondering, why is the market so shaky after we've had such a historic run, after there is talk of a rate cutting cycle starting, or I guess it has started, the potential of QE beginning. All of those things are great tailwinds for us. But the market is beginning to realize something with semiconductors. First, the bottleneck for everything is electricity, and we are way behind China in terms of nuclear production. We're not caught up on solar production, and a lot of data center projects are getting put on hold. So the thought is, are people going to keep buying, say, NVIDIA chips in the same quantity if their data center projects are put on hold? Well, probably not, because it might take 3, 5, maybe 7 years to get some of these places online, and they don't want to buy chips now that are going to be outdated several years from now. Now, on the tech side of the equation, with the major tech players who are investing in these data centers, the cost is astronomical. And the spend for next year alone is projected to be upwards of 500 billion, which exceeds, I think, the top tech players. They have something like 327, anyway, mid 300 billion dollars of cash on hand. So the tech companies need to get revalued because they are going to have massive expenses over the next few years building out these data centers, and their profit margins are not going to be the same as they once were. So the market is adjusting to that narrative. If we can get over some of those humps, find some solutions, that might get things back on track. But even with all that happening, there are going to be opportunities in that. And if certain data center projects are not happening, which assets or maybe existing HPC plays could stand to benefit from that? So even in a crisis, there is opportunity. Let's get into the charts and we will talk about all of that more. So let's dive right in. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, we're switching things up a little bit. Instead of starting on the indices, we're going to start on NVIDIA today because they are really shaping the narrative of the market next week. They report earnings on Wednesday after the market closes, and everybody is going to be looking to their forward guidance. And if there are any cracks or signs of weakness, it is really going to hurt the semiconductor and the tech space and could cause us some near term to medium term pain on that side of the market until it's proven that some of these hurdles can be overcome that the sector is facing. So if we're looking at the price action from our consolidation range, we definitely had that key resistance overhead at $185 that we've dipped back below a couple of times, but you could even say that maybe 175 is the real key support zone. In terms of overhead resistance, we've been bumping our head against this trend line, and I'm on extended trading hours. So this is the after hours price action, got right into this trend line again. The question for the overnight action is, are we going to gap up and be able to open above that, or are we going to break down? Now, in terms of strength and weakness, yes, we are making lower highs, but we haven't made a lower low. A lot of other tech names, they've made this lower high and they made a lower low right here. NVIDIA hasn't done that. So relatively speaking, it is holding up well from a strength perspective. The confluence model center cloud on the 4 hours providing support. We have mean reversion dots. We could be more oversold on the RSI, but it's looking fairly neutral to me right here. If we do go to the daily just to see where that's at, the daily RSI is still holding the middle of the range, fairly neutral. We have some mean reversion dots to the overside, but nothing too egregious. And right now we got into resistance at the confluence model center band. So this is getting to a point of decision. Are we going to chop around in the center? Are we going to break back up and go into an uptrend? This is going to honestly determine the direction of the market earnings on Wednesday for the near term, and is going to impact a lot of our positioning. Now, if we look at SMH for the overall semiconductor space, SMH is weaker in terms of it has already formed a downtrend on the daily. So we clearly have lower highs, lower lows, lower highs, lower lows on SMH. And we've broken back into the confluence model center band on the daily. Now, we did close above that, but this is a sign of weakness and things breaking down. You can see something very similar on TSM. This chart looks almost identical, breaking down in that daily downtrend. But the one bright spot is the memory component suppliers are still holding up well. So if we look to MU, and I'll pull up SanDisk in a second, these have maintained their uptrend, and the dip buyers really stepped in strong today. There was selling towards the end of the day, but it almost got back to its highs. So seeing that was a good sign. The one I would say encouraging sign that dip buyers for this segment are still really coming out and are excited to buy these names. And SanDisk is the other one, and that's still in an uptrend. Not quite as strong as the buying on MU, but we did, really get to the highs of that previous candle. And then the latter half of the day, the last couple hours, were met by a lot of selling in the indices. So we'll flip over to the indices now to look at that. Okay, on the S&P 500, this is where we were recording yesterday. We were on support at about 67.50, and the overnight selling persisted, really aggressive selling, but then the buyers did step in. Now, the sellers have been in control really since the 29th of October. So it was good to see the buyers step in, but they didn't step in strong enough. They didn't prove enough. We didn't get above that key 6,800 level that would show us more strength. And we did sell into the end of the day. Now we are finding a bit of support here at that 67.50 again, where we were yesterday. So decent sign there. But the question is, where are we going to open in the overnight action on Sunday night? If we can get firmly above that 6,800, maybe we do have a shot of passing these previous highs and continuing in an uptrend. But if we drop down in the overnight action, there is a good chance of a breakdown. And we have this head and shoulders pattern in play, similar one in play for the NASDAQ. And if we just connect all these lows through here, you can see that we just breached that trend line in the overnight action Thursday night into Friday as well. So we're hanging on, but if this breaks down, this would target much lower prices, and we have already dropped top to bottom, 4.25%. So we'd be seeing about an 8% drop on the NASDAQ, 8 to 9% drop if this pattern confirms. And then if we go over to the NASDAQ is in a very similar place, but it is weaker. So the NASDAQ made lower lows. So this whole way down, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Whereas the S&P 500 held this level overnight and had a higher low. So that relative weakness is showing through here for the tech space. Also, this didn't recover as high. It rejected at 25,250, whereas the S&P equivalent level that it got to was right here, that next resistance zone, which is at 25,400 for the NASDAQ. Now, we also have that head and shoulders pattern in play here. There are a couple different ways you could argue about, how you want to draw that neckline, because it isn't the cleanest pattern. But even though we broke down with lower lows, the thing I want to look at, and sorry, just quick thing, this one top to bottom is at about 6, and let's measure to this one, 6.3%. So we'd be looking at over 12.5% if this pattern confirms for the correction for the NASDAQ. But if we're looking back at this consolidation period in July, you can see we had a very kind of similar pattern here. If you look at this initial drop and we compare that to this initial drop that broke our uptrend price structure, those were both bearish engulfing candles on the weekly. Actually, very interesting that we talked about those, and they both recovered the next week. We got to fresh highs in both instances, right? Then we dropped down to those next lows here, lower high, and then we make a lower low and a lower low. Now, in this instance, we were able to recover the uptrend. The question is, are we going to gap up, and are we going to be able to recover to make fresh highs, or are we really rolling over this time? And in terms of where we would be targeting for that 12% pullback, it would actually be right in the middle of this volume cluster right here. So it would get us to the middle of this range, which is sitting at about 23,300, let's say, for round numbers. That would be roughly that 12% pullback from the peaks. Actually, sorry, a little bit lower. 12.33 gets us to this bottom line. So 23,130, which actually makes a lot of sense because it's the bottom of this previous consolidation range where all those lows came in to give us a lot of support on the NASDAQ. Okay, here's the important one for today, Bitcoin. And unfortunately, we broke down from this trend line that has been supporting our price action since August of 2024. So not a good sign to see that breakdown. We're having a little bit of a bounce now, and we can, I wasn't really planning on doing this, but if we go into say the 1 hour chart, now we have Wall Street involved, right? In Bitcoin. And you can see whenever we get into the overnight price action, this is the overnight price action. This is when the US market opens, overnight price action. US market, well, rose a little bit. But hold on, let's go back in time. You can just see this repeating pattern of doing okay during the overnight, selling, overnight okay, selling, overnight okay, selling. So Wall Street is using Bitcoin as or particularly the ETFs, as a de-risking vehicle. They're playing the ETFs short. That's putting a lot of pressure on things. So Bitcoin is going to trade far differently than it has in past cycles. That's probably the reason why this cycle has been so muted and so different than past Bitcoin cycles. But if we're taking the glass half full view, I would say the good thing is probably that there is going to be more of a floor underneath, and the drawdowns, if this is the start of a bear market, isn't going to be as extreme. It'll be more shallow, and there is a good chance it could be shorter as well, particularly if we see some more tailwinds next year for crypto with the Clarity Act passing and institutional adoption and that sort of thing. So it's everything's shifting, and I think we don't want to be too rigid in our thinking, and we need to be open to what the price action is actually telling us. But in terms of what it's told us here, clearly we have broken the pace of this uptrend, and there could be more downside price action in store. We do have a lot of liquidity sitting at around 92K, and then there's a key support at 88,000. We can just actually draw that in. That's one of our key horizontal levels. If we just look at these previous lows and highs, it's kind of the dividing point of the December to January highs and then that April tariff correction. And if we see a strong reaction from one of those, then I'd be looking to this trend line to play a bit of resistance now that we've broken down from it. But the main thing we need to watch right now in the near term is the weekly chart. And the weekly close is going to be all important for us, and for two reasons. We have this trend line on the weekly RSI that we broke out from that now we've broken underneath. Now, if we get a big rally on, this could still close above. But the more important thing to watch, and I'll just delete this really quickly, is this break below 44 on the weekly RSI. And the last time we were below 44 on the weekly RSI, that was the previous bear market. And we've generally held above that during bull runs. And then once we broke down, this was a precursor to the breakdown, that last dead cat bounce rally. Watch out if we get one of those now. And then the longer drawn out, more painful part of the bear market. So that is one thing to definitely look out for on the weekly candle close. And if we close below that, you either probably want to de-risk a little bit with your crypto adjacent plays, or look for some kind of relief rally that might come in. But imagine that this would eventually now break down and is signaling that it's going to get to the bottom of the range, and also the weekly mean reversion will probably get us a dot. And if we get a buy dot on the weekly mean reversion, that would be a good signal too for a potential entry. And one other thing I wanted to point out, which is actually not something I spotted, but Zero Effort in the Discord, he noted that on the monthly RSI, we now have a head and shoulders pattern in play on the monthly RSI right here. And normally I just draw trend lines on the RSI, but you can absolutely map out patterns on the RSI as well. You can draw, symmetrical triangles, rising and falling wedges, all that stuff. I just haven't really paid attention to too many of these patterns, and frankly, I haven't honestly seen too many of these patterns on the RSI. But really, we have our neckline right across there, and we can draw. The one thing I will say is the left shoulder is a little bit large, so maybe that would be the one thing where you could argue that that would be invalidating this, but I'm going to map this out for Zero Effort anyway, because I think it's interesting, and that gets us honestly right to this level here at 44, where on the monthly we've usually found a lot of support as well. So that would be, left shoulder's a little big, but it would be suggesting something similar. And last thing I almost forgot to do with Bitcoin, but with Solana, we went back and we mapped out another trend line to give us a sense of where we could potentially find some support stepping in. So if we draw another trend line off of the lows here from September of 23, and we connect this to that pivot low right there, and that's the pivot low on the yen carry trade low in August. And let me just sharpen this up a little bit, because I think we are not necessarily taking it from the swing low we should. Let's map it up right there and right there. Okay, better. Okay, I'm just going to keep this on our charts as well for Bitcoin to give us a sense of where we could anticipate some support. And honestly, if we chop around for a couple weeks, this could coincide with that 88 level if we touch the trend line then. If not, if we drop below 88, that would be coming in the low 80s, around 83, which I think around 82, 83, there's another zone. But honestly, the next real key level, if we were to break down, would be taking the previous highs to those lows. And we can just keep this on the chart as well. So 73 to 74, 73 and a half to 74 and a half. Let's just take it to that peak. Split the difference, 74.4. It would be our next level on Bitcoin. So we have those zones to watch out for. And obviously, the strongest point would be bouncing off of this 88 or higher. You know what? I keep thinking I'm at the end with Bitcoin, but we have more to say. So the last thing we want to keep on our charts here is this downtrending resistance on Bitcoin. So that's coming from the all-time highs and touching here on the 28th of October. You could draw a minor trend line too, but I'll probably just keep my chart clean because these are pretty close. But breaking this trend line would be a sign of strength that we are recovering. Now, if we get into this and we reject again, then that's a sign of weakness. So now we have all of our trend lines drawn up. We know where to expect support and resistance. There is a little level here, at 92 that we talked about. Really, 88 to 89 underneath is that major zone, and we'll have to take it one day at a time. Okay, so going back to Solana, we broke our major trend line here and we have been in a downtrend. So this has been front running Bitcoin in terms of the correction. And just to redraw what we did yesterday for everybody who was not here to tune in, if we draw a similar trend line to what we did on Bitcoin, you can see how that next support comes in, actually where the weekly confluence model cloud is, which is around $126. So if we drop further, that's where I would anticipate support. And then we have our overhead trend lines, our major and our minor overhead trend line that we need to get through to tell us that we might be forming a recovery. And the one good thing about bouncing at this level, even though we've broken down this local trend, is that we would be bouncing at a higher point than the April 7th low. So we could presumably, even though it would be a bit of a struggle, find a path to recovery from there. So something to watch on Solana. We know our resistance trend line overhead, our support down below, and you could actually argue that we have right here. I need to turn this magnet off. It's quite annoying. In terms of a horizontal support, cutting through where all these weekly candles closed and where we wick down, we also have that level, which is coming in at 126. So that gives us a lot of confluence between this trend line and these lows at 126 if we intersect that, say, sometime next week. Okay, looking to Tesla, we gapped down in the overnight price action and then had a strong day, but what you'll notice is our consolidation zone over the last couple months where we were finding support around that 410 or so, we moved up to that and that turned into resistance today. We also have the optimized trend flipping orange. We weren't able to break this downtrend line, which I'll show you on the 4-hour. Now, we did find a little bit of support at that 382, 383, but that doesn't correspond to too much price action outside of these lows back here in January of this year. The real major support is going to be coming in at that 367, let's just say 370, to keep it simple, which were all these previous resistance areas. So 370 to 373, somewhere in that area, we should see some support come in for Tesla. And the question is, will the daily RSI be bottoming out at that point? And that would be a higher confidence entry to get back into this at that juncture. If we do look at the 4-hour, the 4-hour will give us a better representation of that overhead resistance. And you know what? It is not drawn in cleanly on this chart. Let's go into the 1-hour and give me just a second here. I turned the optimized trend opacity up and so we could see it on the daily, but it is not helping here. Okay, here on the 1-hour, you can see how this trend line is just giving us a bit of resistance. Now in the overnight action, we're trying to pop through it. We're definitely oversold, on the 1-hour and on the small time frames. But to me, the larger time frame, the daily, is still leading the way. So even if we break this little trend line here, we have a lot of proving to do, and we have the confluence model center cloud coming in. So we could honestly move up into this and still reject and continue in the broader downtrend. We'd still be making a lower high. So something to watch out for on Tesla. Until that daily band recovers, I'm not totally convinced that we're done. Now, in terms of other targets to the downside, and I have to credit DZP from the Patreon and Discord for spying this as well, we definitely have a double top in play. It's within tolerance of that couple 0.5%. What are we at here actually in terms of that? We are at 0.82%. Yeah, so definitely within tolerance there, and we could go into the after hours price action to see how close we are here because that other peak's a little higher. So let's just make sure we're feeling okay about that. And yeah, 1%. Still feeling okay about that in terms of being within tolerance for a double top. But let's just measure that out off the daily to keep things simple for us. And if we're looking at that and then we're measuring out the intervening low to that, and then we take it to the breakdown point, that actually has us a little bit lower. That has us at 350, which whenever we map out price targets, we want to look to the left of the chart and say, does this make sense? And you won't always bounce, right from this point, but 350 comes in line with a lot of these previous highs right here. So always look to the left when you have a price target and say, does it make sense? And yeah, it's the top of these consolidation zones. So yep, that would be a decent price target to look out for there on Tesla. Okay, to round things out, I'm just going to cover a couple chart requests. I think it was Kung Fu Panda that requested Astera Labs. So James from InvestAnswers posted a trade alert on this one. I haven't looked at Astera Labs in a while, but he had been wanting to get in, and he had a trade alert set at this previous high here at 146, which makes a lot of sense that, you know, previous highs could turn into support. Now, let's just look at this, though, to see where we are on the journey of resetting. We have a mean reversion dot, so I'm sure he was looking at that as well. But we didn't really fully reset on the RSI, and we are still in this downtrend making lower lows. If we're looking to the next level of support, and we didn't, this really isn't sitting at a key fib level either. We broke below the 50% where we found a little bit of support. And you know what? Actually, 1 second. Let's go to the 4 hour just to make sure. Yep. Okay. I just wanted to go to the 4 hour to make sure that we were drawn to the after hours price action to get an accurate fib level reading here. Now, we've got the 200-day moving average coming up, and we've got the 382 sitting at 128. And we've also got the Confluence Model Center Band coming up. So all these things are going to be converging next week. If you set a limit order there, which I know is just, you know, a few bucks below, I think he got in at like 149 or something. But still, I mean, percentage-wise, what is that? That would be 13% lower, you know? So to me, that's where I would dangle a limit order. Now, I would also put a tight stop on this, because if tech gets beat up and we do get into a couple more challenging months and this breaks into the lower band, then we have to be careful of lower prices. So I like buying into, say, the Confluence Model Center Band, the 200-day moving average, this fib level, because breaking below there gives you a clear point to set your stop, just kind of in the shaky market environment we're in right now, right? And then you could just take it level by level. And honestly, the 236 seems like a much better zone to me, because you have, or a much safer zone to buy, even though you'd be below the 200-day. You have this whole consolidation cluster. You have this big chunk on the VRVP of previous buying support. And you have these previous highs coming in right here from the IPO back in April of 24. So that would be a very high confidence zone. And if we were to break down, so if you just take this level by level, that would give you another 24% drop to the downside. So setting those stop losses is really important with your trades, but an interesting one to watch next week. Okay, I need to cover coin. There's someone on YouTube. I'm so sorry, I'm forgetting your username right now, but they requested coin 2 or 3 times, and I told them I would cover it, and then I forgot. And yesterday we did requests from the community, so it didn't get covered. So I'm covering coin now. And we can delete this line, even though we bounce from this. This isn't a trend line you should be paying attention to. This is a price and time extension, which was lining up with the eventual price we hit here at 444. So you can see how that was actually taken from the earlier part of the bull run and mapped out there. So not a trend line that we should be looking out to for support. You know what? Actually, let's leave it, because we bounced from it right now. So if we break below it, this is only the second touch point, we'll delete it. But we bounce from it right now, so why not? We'll keep it. The thing I'm looking out for coin, and the reason I got out was I got out back here when we broke this RSI uptrend on the daily. So this is where I exited my calls, and my last position was from this low base. And you can see how RSI breakdowns can foreshadow, you know, more downside price action. And anytime we break these RSI uptrends, we generally correct all the way back down. So coin has a little bit more to go. And now on the Confluence model, we're clearly in the lower band, and we broke down from this support level. This is like the $360 level on MicroStrategy, where it found support, broke down, and then found resistance. This is the equivalent for coin, which is sitting right at $292, or let's just say 290. Bounced up into that today and rejected from that level. We're below the 200-day moving average. We're in the Confluence model lower band. So you would have to imagine that we're going to take a couple swings down here. In terms of price targets, I don't necessarily have a price target for coin, but we can look at zones. And the major zone is the point of control, the most traded zone at 254, which is right in the middle of this past consolidation zone. So we could expect a decent amount of support there. I would probably look to the lower part of the range, which corresponds with this swing low right here and the bottom of the cluster at 240. 240 would be really strong support for coin in my mind. If for some reason we break down, it's probably going to be a bit more of a drop, and then I'd be looking to all this previous price action and the VRVP spike level there, which would be at $212. So those are your downside targets, but I imagine the daily RSI could get close to resetting if we get into that 240 level for coin. Okay, and the last couple requests are crypto, XMR, USD, Kraken. Let's do the perpetual one, why not? Okay, XMR, oh, that looks like a little blow-off candle right there, but clearly in a strong trend on the daily. Could run a little higher, but it's fairly overheated. I'm just looking at it on the weekly. You have a weekly breakout there, so you avoid the double top, so that's good. I mean, you know, the trend is still up. It's definitely overheated on the daily, but you could make an argument that this is just in terms of the confluence model upper band getting into it for the first swing. So even if we correct, you have to imagine that it's got a couple more in it and a bit more upside. And wow, strong buying demand. So even though Bitcoin and Solana are not faring well, there are names in crypto that are performing. I would encourage you guys, if you are trading crypto, I know a couple of you are just in crypto, just check the dashboards in terms of DEX screener or coin market cap and see what's performing. You know, you maybe don't want to go with the ultra low market cap coins that have only been around for a few days, and unless you want to have a very exciting time trading perps on the 1 minute chart. But you can look for names just based on, you know, their performance over the last 3 months or 6 months or 12 months, and find the stronger names because there are going to be narratives that are moving even in a bear market. So anyway, I don't have, you know, too much to say. We're maybe finding a bit of resistance right now at this previous top at 421. The daily, yeah, it's overheated, but it can always get hotter for crypto, and you're in this upper band. So if this corrects and pulls back and bounces off the confluence model center band, completing that first swing, you could definitely play it for, you know, another leg higher. Okay, last one is ZEC or Zcash, which has also been running like crazy privacy coin play, and was doing a whole lot of nothing for a while and exploded from $48 up to $700 since the end of September. So an amazing 6 weeks. And it did have a decent pullback. I think it was like 40% or something from that little peak. What was that? That was, yeah, 43%. I know Chewy in the community bought the dip and it's back up. The one thing you have to watch out for now is perhaps a little bit of a double top. If you can break this previous high, great. I would just say that it's probably starting to lose some steam. Now, these things can always run longer than you think, but the RSI is making a bit of a bearish divergence with lower highs and higher highs in the prices. If we go to the weekly, which we only, you know, have a couple weeks, we are now at 4.6 standard deviations over bought on the weekly. So this parabolic move is not going to last forever. We're 1, 2, 3, 4, 5, 6, 7 weeks up in the swing. I guess you could say we're not 7 weeks up because you had that little doji bar there on the third week. But anything, once we print this, anything over 7 bars in one swing has a higher chance of correction. So this could run, you know, to 9 to 11 bars, but it's going to correct eventually. So just be careful. If you've made good profits, I would encourage you to lock some of those in when you get exponential moves like this, because they can come crashing down just as quickly. And volatility is increasing too. Just looking at this on the weekly, see how the candles are getting bigger and the wicks are getting bigger. So yes, there's still strong buying demand. This can last for a while, but if we continue to have massive candles like this and get large wicks in either direction with that volatility picking up, just that's a sign of things getting closer to the end. So be careful out there. Okay, so that is it for the charts. Been been saying this every week, but we really need to watch that weekly candle close for Bitcoin. And it is going to be interesting to see how the markets react on that overnight open on Sunday night. Can we get above those key levels on the S&P 500 and the Nasdaq? And can we invalidate the head and shoulders pattern? That would suggest that we have some near-term pain ahead. So let's look out for that. I'll check in with you all on Monday. I hope you have a wonderful weekend. Bye for now.